$1,000 of passive income just by selling one put option. I'm full-time institutional crypto trader, and my public portfolio has 180 win trades and 0 losses. And I will show you step by step how to sell put option on Bybit in the right way. So let's go. First of all, I will cover the fundamentals of selling put option and how to find the highest profitability. After that, I will show you a real example how to sell put option on Bybit, and we'll cover different scenarios that could appear at the expiration date. In my recent video, I covered what does it mean to buy call option and what does it mean to buy put option. Simply speaking, put option, this is my obligation to buy Bitcoin or Ethereum at the predetermined price at the expiration date of the option. In the reality, options are cash settled. And a bit later I will explain you exactly how does it work. But now let's stick to this example. So I have obligation to buy Bitcoin at a lower price. And this price I can choose by myself. And for my readiness to buy Bitcoin at a lower price, I get a premium, which is at the end my passive income. And the profitability for this passive income is very high. And very soon I will show you exactly at the live example how high is this profitability. Let's take a look how this strategy really works. Here you can see a chart of Bitcoin. And let's assume that still the price of Bitcoin is too high for me. But the price of $102,000 looks attractive for me. And if the price of Bitcoin would drop to a price level of $102,000 or below, I will be ready to buy Bitcoin after 16 days. And for that, I can receive a nice profitability. In this case, price has to drop almost 10% lower. So I will be ready to buy Bitcoin at a nice discount price comparing to the current market price of $112,000. And no matter what, this premium will belong to me, even if the price will not drop to $102,000. First of all, to trade options, we have to open the option chain. And to open the option chain, we have to find the trade and go to the options. And here we can select for which cryptocurrency we would like to trade options. Bybit offers the options for Bitcoin, Ethereum and Solana. So let's take a look at the Bitcoin example first of all. And here you can see the option chain. Very briefly, I will show you exactly what you have to look at. And to understand the option chain, first of all, we have to get a better overview. And I will select only those parts of the option chain that I really need. So we don't need this one, this and this. But it's very important to have a strike distance. We have to select the expiration date, because all options have their own expiration date. Options are really similar to insurance. So that means if you would like to get the insurance, you have to set up the period for which insurance will be valid. And this is exactly the same with the options. And on Bybit, you can see the multiple expiration dates. And for example, the shortest one is equal to 1 day. And right now, the time to expiry of this option is equal to 12 hours. So that means all the options on the option chain after 12 hours and 30 minutes will expire. Here you can see also the options with expiration of 1 day and 12 hours, 3 days, 1 week, and so on. And the longest maturity is equal to a bit more than 300 days, so almost 1 year. And as I said, I am ready to buy Bitcoin at the price of $102,000 after 16 days. And let's find this expiration date. In my case, this will be the 5th of September 2025. But if you're watching this in the future, you just need to find the expiration date which suits you the best. And now let's take a look at the option chain. On the top of the option chain, we can find one more time the expiration date. Here we can see also timed until the expiration date. In my case, this is 16 days and 12 hours. And here we can see also the price of Bitcoin for this option. And also here in the middle, we can find all the strike prices. And as I said, I would like to buy Bitcoin at a price of $102,000. In this case, this is roughly 10% lower than the current market price of Bitcoin. On the left side, we can find all call options. And on the right side, we can find all put options. All options that are lower than the current market price are out of the money options. And this is exactly what we are looking for. And I am looking for a put option with a strike price of $102,000. And here we can see three different figures. In the middle, we can find the theoretical price of the option. So that means you don't need to calculate the price of the options by yourself. This is a good indication for you to understand where the fair value of this option is right now. And here you can see also a bid price and ask price. If I would like immediately buy a put option, I have to take a look at the ask price. If I would like to sell immediately put option, I have to take a look at the bid price. And in our example, if I am ready to buy Bitcoin at the price which is 10% lower than the current market price, after 16 days, I get a premium in USDT which is equal to $630. And this is quite high profitability. And if I don't want to buy one single Bitcoin at that price, I can also trade a smaller quantities of Bitcoin. For example, the smallest quantity of put option that I can sell is equal to 0.01 Bitcoin. And because I am ready to buy one single Bitcoin and the price of $102,000, in this case, I will need 102,000 USDT to follow this strategy in the right way. And for example, if I would like to wait a bit longer, I can select the longer maturity. For example, a bit more than 1 month. And let's take a look what kind of premium in this case I can get. So I'm going to select the option with the expiration which is equal to 37 days. And now I have to find the strike price which suits me the most. In this case, I have to choose between $100,000 and $104,000 strike price. By selling a put option with a strike price of $104,000 with expiration date after 37 days, I get a premium of 1,780 USDT. And don't forget, in this case, I will need 104,000 USDT to buy one single Bitcoin at that price. And as you can see, as closer the strike price is to the current market price, the higher the premium I can get. And the reason for that is really simple. The closer the strike price to the current market price is, the higher the chance that this strike price will end up in the money. So that means that the price of Bitcoin will hit the strike price. And as a result, the option premium has to be higher to compensate this risk. But because I would like to buy Bitcoin with a discount, I am looking at the strike prices which are far away from the current market price. And by selling this put option, let's say with a strike price of $100,000, I will get the premium upfront. So that means the option premium I receive immediately after I sell this put option. And it will be visible in my account balance. And no matter what, this option premium will belong to me. And all different scenarios that could appear at the expiration date we will cover very soon. And now let me show you exactly how to sell this put option and receive this premium. So here you can see under wallet balance that my account balance is equal to $2,013. So that means after I sell the put option, this figure will increase. And no matter what, this premium will belong to me. And now let's sell this put option and receive the premium. And I go to the trade, options, and BTC USDT options. Select one more time the expiration date that I would like to trade, select the strike price, so let's say in our case this will be a strike price of $100,000. I have to click on it, and here I can see the trading window. Here I can see the fair value of this put option, which is equal right now to $1,190 per one Bitcoin. And here I can see also a bid price and ask price. And as I said, if I would like to sell put option, I have to take a look at the bid price, which is equal to $1,180. And to select this option, I have to select sell button, select the order type that I would like to use. In this case, I would like to use the limit order, price at which I would like to sell put option. In this case, if I would like to execute this trade immediately, I have to select the bid price, which is equal to 1185 USDT, and select the quantity that I would like to trade. As you have seen, I have 2000 USDT on my balance. So that means, to follow the strategy in the right way, the maximum amount that I can sell is equal to 0.02 Bitcoin. And now let's enter this quantity. So 0.02 Bitcoin. And now I have to sell on the sell button. And here I can see the confirmation window, which is telling me that I'm going to sell a put option for Bitcoin USDT with a strike price of $100,000. The price for this contract is equal to 1185 USDT per 1 Bitcoin, and I would like to trade 0.02 Bitcoin. And I press to the confirm button and it's done. So the trade was successfully executed. And here you can see now that I have a position of 0.02 Bitcoin with a minus sign. So that means I sold this put option. And let's take a look at the trade history. So here you can see this trade which I just executed. So I sold a put option, and for that I get a premium of $23. So that means this amount should be credited to my account balance. And now let's take a look in my wallet. So I'm going to open my trading account wallet, and this is exactly the case. Now you can see that the wallet balance has increased and now is equal to $2,036. So $23 more than it was before the trade. And now this premium I can use for whatever I want. And no matter what, this premium will belong to me. And now let's take a look what could happen at the expiration date. And let's assume that as a first scenario, the price of Bitcoin after 30 days will stay relatively unchanged, and as a result will be higher than the strike price of $100,000. In this case, I am not able to buy Bitcoin at the price of $100,000. And as a result, the option will expire worthless. And what I can do in this scenario, I can sell put option one more time and receive the premium once again and receive my passive income. Now let's take a look at the second scenario. In the second scenario, let's assume that the price of Bitcoin will move even higher and maybe will reach the new all-time high. In this case, the option will expire also worthless, because at the expiration date, the price of Bitcoin will be higher than $100,000. And as a result, I cannot buy Bitcoin at the price of $100,000. And in this case, I can sell another put option and receive the premium once again. Now let's take a look at the third scenario. In this case, let's assume that the price of Bitcoin at the expiration date will be lower than the current market price, but still will be higher than my strike price of $100,000. In this case, I still not able to buy Bitcoin at the price of $100,000. And as it was in the previous two examples, the option expires worthless. And as a result, I am also able to sell another put option and receive the premium once again. And as you can see in three different scenarios, when the price can rise, stay the same, or even fall a bit, my target price is not reached, and I can sell another put option and receive the premium once again. And that's why I don't want to have the strike price too close to the current market price, because my goal to receive as much passive income as I can and buy Bitcoin as a result at the lowest price as possible. And now let's take a look at the last scenario. In this case, let's assume that the price of Bitcoin will end up at the expiration date lower than the strike price and will be equal to $99,000. And now let's take a look in the more details what exactly happened at the expiration date. In this case, the option ended up in the money. And because the option expired at a lower price than my strike price, I will have a loss. So in this case, my option will have $1,000 loss if I sold one Bitcoin. But this is not directly the loss, and I will show you exactly why. Because let's assume I have a buy limit order exactly at $100,000. And after I bought one Bitcoin at the price of $100,000 and the price dropped to $99,000, I have an unrealized loss of $1,000. because the value of my Bitcoin is not $100,000 anymore, but $99,000. And this is exactly the same case with the option. So, and what I have to do now, exactly at the expiration, I have to go to the spot market and buy one Bitcoin at the price of $99,000. But my average price or break-even price will not be equal to $100. And as I said, even if the price of Bitcoin at the expiration date will be equal to $99,000, I will still have a profit because the premium that I receive massively reduce my average price. And my break-even price in this case will be equal to $98,815. And also the same logic applies to Ethereum or Solana options. For example, if I would like to buy Ethereum after 9 days at the price, let's say, which is 10% lower than the current market price of $4,150, in this case, this will be a strike price of $3,700. In this case, I will get a premium of almost $50 for one Ethereum. The minimal size for Ethereum is equal to 0.1 Ethereum. So that means if I sell a put option for 0.1 Ethereum, in this case, I will be ready to buy 0.1 Ethereum at the price of $3,700. And in this case, I need $370 to be able to buy 0.1 Ethereum. And in this case, I will get a premium of $5. And this is quite high profitability. But now let's come back to the Bitcoin. And after I bought one Bitcoin, I can use it to sell call options. And as a result, be ready to sell my Bitcoin at a higher price. So let's assume at the price of $120,000. And also in this case, I can receive my passive income from the options. And in this video, I will explain exactly how to sell call option to get the passive income. See you in the next video. Bye.